Hello everyone, thanks for joining us today and welcome to this presentation on how to increase your risk-reward ratio. And this is for virtually every trade that you can be in. Welcome, my name is Stephen Primo. I am the president and founder of Specialist Trading. And I want to thank you for taking time out of your Wednesday to join us. Today I'm not only going to give you one technique, but actually two techniques that are offered in our 7 Secrets of Money Management course. And these are ways in which you can increase your risk-reward ratio. Now, for those of you who are new to my presentations, we are first and foremost an educational company. As you can see just by the title of this presentation today, we are going to be teaching you each and every week when we give these free presentations. We're going to give you at least something that you can walk away with and hopefully add to elevate your trading. I've been trading for 38 years. I started my trading on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of them I was a specialist for Donaldson, Lufkin, and Jenrette. So as you can see, that's where we get the name Specialist Trading. I know a lot of people aren't familiar with what a specialist is or does. There aren't a lot around anymore. So if you ever Google any of the pictures of the exchange floor and you see people screaming and yelling on the floor with all this paper strewn all over the place, the specialists were those gentlemen behind the large wooden booths that made markets in anywhere from 35 to 50 stocks. I made markets in roughly about 50 stocks. I traded through the crash of 1987 and the bull market that followed. And I've seen and experienced just about every environment imaginable, as well as every different trading technique. So I know what works in terms of consistency. I know what doesn't. And this is what we do. We teach and mentor all of my students the tips and techniques that I've accumulated in my 38 years, hopefully to elevate your trading so you can become a part of the process and make your own trading decisions. Now, as I said, I'm going to give you 2 great techniques today that you can start using right away, but before we begin, we're required to show you this. So please take a moment to view our disclaimer. I'm going to give you a lot of performance results using these techniques, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Once again, we're required to show you this, and as you're taking a brief moment to look at it, I would also like to invite each and every one of you, if you haven't done so already, to follow us on Twitter. There's our handle at SPCLST. TRADG. You may want to write that down, copy that down. I post information on a daily basis, anywhere from signals that our strategies have generated to little bits of wisdom and tidbits along the way to help you with your trading. So there's a lot of great but brief information on Twitter. So feel free to follow us on a daily basis. Now, one last thing I want to state, I want to extend an invitation. I know we've already had a lot of people responding. We've already had a lot of information requests about more information. But for those of you who just happen to be here for the first time, if you're very interested, I want to also invite each and every one of you to attend the Trader Super Conference that it's being put on this weekend. I know it's a little late notice, but I've been talking about it for the last month. The Trader Super Conference being held in Las Vegas that I will be attending. This is the second year I was asked to speak, and what it is 2 full days of education, October 17th and 18th, 7 trading expert speakers, yours truly included. We're going to be talking about stocks, options, commodities, and I will be speaking about futures and Forex trading. All right. After the presentation, there is going to be a cocktail reception as well as a panel discussion. It would really be great to see and talk to a lot of you. I know last time I spoke, last year, a lot of you joined us and I was able to meet you. And it would be great. We've gotten so many new members and so many people that were really excited and enthralled about what we did last time. So feel free to come out again. There's the link. You may want to copy and paste that onto your browser. As I stated, this is being put on by Trading Winds, 2 full days of education, 7 speakers. There's a link. You have to basically copy and paste that onto your browser. But I think the best thing about this is that the conference, once again, is being held in Las Vegas. Most specifically, it's being held at Caesar's Palace, Las Vegas. Now, if you've been to Las Vegas before, you know that Caesar's Palace is top of the line. So if you've had a great month or even a great week and you want to reward yourself plus get tons of information from 7 great speakers, feel free to join us. That's at Caesar's Palace, Las Vegas. Let me just backtrack one more time. If you didn't copy down that link at the very bottom, there it is. And once again, I met a lot of you last time. A lot of our members and students joined us last time I spoke. There was a large crowd there. I'd love to see you again for all the new members and the new people joining us, okay? Once again, being held this weekend at Caesar's Palace. Okay, now, as I stated, Specialist Trading is first and foremost an educational company. It is not our philosophy at all to simply force feed you with signals and tell you what to trade or how to trade, the way probably the majority of all websites do. We don't believe in that at all. In fact, over 38 years, if there's one thing I've learned, that is a road to disaster, because basically you're taking yourself out of the game. You're not a part of the process. So what Specialist Trading does is we provide all of our students and members with sound, fundamental information that has stood the test of time, things that I currently use in my own trading, and then work and mentor you so that you can feel comfortable using it and design something that best suits your needs. And then basically you're on your own. You're not required to be here every week looking for signals or asking me what should I do next. That's the way you become consistent, in my opinion. That's our philosophy at Specialist Trading, is that consistency is by you becoming a part of the process, trading with a purpose. Most traders don't trade with a purpose, and the reason I say this is because I was one of them. When I first started out, I was looking for everyone and everything to tell me what to do, how to trade, where to get in, where to get out. But I wasn't at all using any of the information I had learned, or I wasn't learning anything, actually. I was just relying on an outside source to tell me what to do. Once again, that is a recipe for disaster. You're not going to be consistent doing that. It wasn't until I finally started to listen to my mentors and trust in myself and become a part of the process that I started to become consistent. So that's our philosophy. My goal is to teach you, not to trade for you, but to teach you how to trade with the Specialist Edge. This is the same edge that was able to turn my trading around, and this is what I teach all of my students and members. So here's what you're going to learn today, all right? Once again, this is a class, so here's what you're going to learn today. We're going to talk about acceptable risk-reward ratio, what conventional wisdom says we should be looking for in a risk-reward ratio type of environment. Then we're going to talk about low risk-reward ratio, what is basically unacceptable. I will then show you how to increase your risk-reward entries and as well how to increase your risk-reward exits, all right? So I got a lot of stuff to cover. I'm going to be sharing all this with you. Remember, this is part of our course that we're giving to you for free today. But here's the one thing I just want to make sure that since this is a class, I know a lot of people like to ask questions. There are a lot of presentations and webinars where you get to ask questions as you go along. I like to do things differently. Let's save all the questions for the very end of the presentation. So if you have a question, kindly remember it. We'll get to it in the next 20 minutes or so. The one question I will answer is this being recorded? Yes, it is. We record all of our presentations. Simply go to Pro Trader Strategies. They are the marketing firm I've teamed up with, and they will send you a link to this recording. Okay? They're the ones that sent you out the email or spoke to you in the first place. So they'll send you a link to this recording for today's class. Many people have technical difficulties with their computers where they have to leave early, so you can request a recording if you'd like. All right, so keep your questions till the end, and then we'll go over them at the question and answer period. So why don't we begin? Let's talk about a risk-reward example first of all. This is a very conventional definition of risk-reward ratio, an example of how it works, just as a little refresher course to most people. Let's say in this hypothetical example that you purchased 100 shares of XYZ Corp at 20. And you placed a stop loss order at 15. Therefore, if you were stopped out, you will risk a loss of 5 points. So in other words, if the trade goes against you, it doesn't work out the way you want it to, you're going to lose 5 points. If we look at this hypothetical example here, you want to buy here at 20, and before the trade has a chance to fruition, you place your stop here at 15. So you're risking basically 5 points, okay? All right, now, let's also assume that you believe the price of XYZ will reach 30 in the following months. So in this case, you are willing to risk 5 points in order to make an expected return of 10 points. So your risk is 5 points, and you want to exit up here up 10 points, okay? So after examining all this, since you stand to make double the amount that you risk, this trade would be said to have a 1-to-2 risk-reward ratio. In other words, you're risking 1 unit. 1 unit would equal 5 points in this case, to make 2 units. And as we see in this hypothetical example here, ultimately, you achieved your goal. The stock went up to 30. It took a good 6 months to go up there, but it went up to 30, and you're out. So this is once again, just an educational example to see what an acceptable risk-reward ratio is. Most conventional wisdom to tell you should have a minimum risk-reward ratio of 1-to-2. Therefore, you'll be able to make money whatever style you're trading. But if we look at this particular style would be labeled more discretionary, because you basically buy it, you set how much you're willing to lose, and then you set how much you're willing to make, which is just basically double of your risk. And you just kind of sit and wait. It's more of a discretionary or more of an investment type of way of trading. But what if you trade a strategy with a fixed exit? What if you're a more interim term type of trader, a swing trader, or even a day trader, and it has fixed rules where you enter, where you place your stop, and where you exit? How do we apply this? All right, so let's look at this example. And we're going to show you a lot of older examples just for educational purposes, because our main focus is on this risk-reward technique I'm going to be sharing with you right now. Here's an older chart of Apple, a weekly chart, by the way. All right, so each one of these bars represents a week. Now, circled in blue is our setup bar. This is an actual signal that was generated by one of our strategies, and the setup bar is always the bar prior to entry. So in other words, regardless of what technique or strategy or system you use, there's always a bar prior to your entry. That's always going to be called the setup bar. The entry bar is the bar you enter on, but the bar prior to that is your setup bar. So this setup bar gave us some rules, and we basically entered on the next day at 1:13. Okay? So that's our entry day at 1:13. Remember, the setup bar is the bar prior to the entry. Now, this particular strategy called for us to place a stop right out here, right below the setup bar at 1:05. Okay? So we're basically risking 8 points. Now, at the same time, the basic format of the strategy called for us to exit at 1:21. Now, in 3 weeks, 3 or 4 weeks, we had a profitable trade. We exited and we made a total of 8 points on this particular trade. Nothing bad. You can't complain about that. That was a nice trade. Took you a month, but you made 8 points on a weekly chart of Apple using one of our strategies. Okay? But someone looking at this who had gone to all the classes and courses and used conventional wisdom would say, well, Steve, you risked 8 points to make 8 points. Everything I've learned, everything I've been trained about is telling me that that's a 1-to-1 risk-reward ratio. In other words, I risk 1 to make 1. And over time, it's not going to make me any money. Well, in fact, it most likely won't, because most strategies are just barely over 50% correct most of the time. And over time, using this wouldn't make you any money. You'd basically be trading water. Now, the strategy we used for this is roughly about, just hypothetically, around 62% of the time. So even with a 1-to-1 risk-reward ratio, it would generate some profit. But what if you just, you just don't feel comfortable trading a 1-to-1 risk-reward ratio? Well, there is a way to alter that. It's secret number 5 from our 7 Secrets of Money Management course. We're sharing this with you today, and here's what it states. You can control the risk-reward ratio of any trade by altering its entry point. You see, through the years, I've had so many people study strategies or systems and say, sure, they seem to work on paper, but the risk-reward ratio is terrible all the time, so I'm going to throw this away. And what many students do and members do is throw away a perfectly good trading strategy with a risk-reward ratio that doesn't meet their needs, but they're not aware that they can control the risk-reward ratio of any trade simply by altering its entry point. So you don't have to alter the other remaining rules of the strategy. All you have to do is alter the entry point. You can still have the same signal bar. You can still have the same stop placement. You can still have the same exit. Nothing really changes there. All you have to do is change the entry. But where most students have trouble is they say, well, okay, I'll just use some discretionary feel on where I want to buy it, okay? And that's not the proper way to trade this, because you need some structure. You need a plan. You can't just be discretionary and say, well, I guess I'll buy it a point down from where I wanted to originally buy it, all right? You have to have a plan or some structure that stood the test of time, and once again, that is more of a professional as opposed to a discretionary decision. All right, so here's what the plan is. We're looking at the same chart of Apple on a weekly basis, the same chart that generated you a profitable trade of 8 points, okay? Nothing wrong there. And here is our setup bar. Here's what we want you to focus on. Remember, this can work with any strategy. I'm just giving you one of probably our most consistent strategies, strategy number 4, I believe. But this can work with any strategy. Now, the setup bar, once again, is the bar prior to entry. We're always entered a day after our setup bar. But what you want to do is measure the range of the setup bar from top to bottom. Measure the entire range. Now, if you like to look at candlesticks, then you measure from the top of the wick to the bottom of the wick. We're not going to just concern ourselves with the open to close range. The real range is the extreme high and the extreme low. And you simply divide it by 4 separate but equal parts. Now, since we're buying, what you want to do is, instead of entering the next day, let's say on the opening or just a tick or so above, you want to be 25% below the top of the setup bar. So instead of buying at 113 the next day, you've placed a limit order to buy at 110. And when price goes down to 110, well, now you've purchased the stock, but look what you've done. You've decreased your risk, and now your risk is only 5 points. All right, you bought at 110, the stop is still at the same place at 105. So you're risking 5 points to make 11 points. So now you've just generated an acceptable risk-reward ratio. You're risking 1 unit to make 2 roughly, actually a little bit more than 2. You're still exiting at 121. You still have your stop placement in the same place. You just lowered your entry point. Once again, I know a lot of you would say, well, okay, well, I'll just, put my entry point down, a point or so. No, you have to have structure. Go by percentage points or percentage levels of the setup bar. Now, let's say you want to increase your risk-reward ratio even more. Well, instead of 25%, we want to drop it half the range of the setup bar at the 50% level. So now we're purchasing at 108. Our stop is at 103, at 105, so we're only risking 3 points now. Now our risk is really reduced down to 3 points, and we made a total of 13. So now our risk reward is closer to 1 to 4, which is extremely acceptable risk-reward ratio, okay? All you did was lower your entry point, but remember, we didn't do it just by discretionary means. We have some structure. We are 25% below and now 50% below. Now, let's say we want to go to extreme and even get a more acceptable risk-reward ratio. Well, we can go to our last level, which is 75%, okay? Now, you would enter your order here at 75%, and in this instance, you purchased it at 106. Your risk was only 1 point now because your stop is still at 5. So you're only risking 1 point. You still exited at the same place and you made 15 points. Now you had an unbelievable risk-reward ratio of 1 to 15. Okay? You think that was acceptable? You risk 1 unit to make 15 times that unit. It's so simple. So see, therefore, you didn't have to throw away the strategy after reviewing it and studying for a little bit and say, oh, this doesn't work. It's only a 1-to-1 risk-reward ratio on the basic format. I want to get out of this. It doesn't work at all. It works tremendously, but you just have to alter your entry. That's one of the secrets of the 7 secrets of money management. And that's how you can really alter your risk-reward ratio. But remember, it's not as easy as just saying, well, I'll put my order down a couple of points. There's no structure in that. There's no type of organization, and that won't work over time. What we've seen when I learned this technique on the floor some 30 years ago is that by applying this structure of basing it off of the setup bar, which is the bar prior to your entry, you'll have a higher level of consistency in order to purchase it, okay? Now, one of the things we have to tell you is that you will get filled most of the time purchasing down 25%. You will get filled a moderate amount of time purchasing it down half the distance of the setup bar. And lastly, you will get filled the least putting it down 75%. But at least if you are filled at that level, you'll have the least amount of entries, but at least you'll have the lowest risk-reward ratio. So it's up to you. This is where you become a part of the process. You see, this is not a system. None of our techniques or system, our methods or systems, we always allow room so that you can add all this information that I've accumulated so that you can add it to your trading. Some traders like to say, you know what, Steve, I'm just going to get at the standard entry. I don't care about risk-reward ratio. Other people will say, no, Steve, thank you so much for this technique here. I'm going to trade the same strategy but down 50%. Others will use the 25 or the 75%. So everyone comes up with a different rate of success because everyone's trading it differently. We're all going to get different results. That's the way you become consistent because you're trading something that you feel comfortable with. You're not simply mimicking someone's trades in a chat room or a trade room. You're not just listening to the guys on TV. You are a part of the process. So that's why I share and give you this information so that you can add these to your trading techniques to become a part of the process to hopefully become a consistent trader. All right, let's go to another example here. Remember, these are older examples, but we're not talking about the actual trades. We're talking about this technique. Here is a sell setup with TGT. Once again, one of our actual strategies that we teach at Specialist Trading that our members have in the course. Now, as we see here, our entry point calls for this right here at 82.75 to go short. And here's our stop at 84.25. So we're basically risking a 1.5. And then here's where we want to exit at 81.75 to make a point. So in 2 days, 3 days, we generated a profitable trade here, but we risked 1.5 points to make 1 point. So that, by all means, by all conventional wisdom, is a faulty risk-reward ratio. I've always been taught never use that. So if someone had studied any strategies that generated risk-reward ratios like that, they'd say right off the bat, well, I'm not going to trade this. But once again, you can always alter your entry point. So to alter the risk-reward ratio on this, we're not going to alter where the bar where we got in. We're always going to alter or make our alter based off of the setup bar, which is the bar prior to entry, regardless of what strategy, technique, or system you use. It's always the bar prior to entry. So we measure from top to bottom, and if we want to alter the first entry point, we simply go up 25% from the bottom now because we're going short. So now we're selling here at 83.25. Stop is in the same place, so we're risking 1 point. Our exit is in the same place. Now our risk-reward ratio is 1 to 1.5. So we made 1.5 times 1. Okay, now it's still not really acceptable. A lot of people would say that's not enough. You won't really make any money over time. So since you know in advance where your exit's going to be and where your stop's going to be, you can figure this all out prior to even getting in the trade. So let's go down to the 50% level. We're going to sell at 83.5, which we already entered prior to exiting. And once, as you can see here, you can keep this limit in, as long as you haven't gotten filled yet. So we see that we went down a lot on this first day here, but then we bounced back. And let's say we got into the trade at 83.5. Now we're only risking 3/4 of a point because our stop is in the same place. And we exited 2 days later at 81.75. So now we made a 1 3/4, which created a 1 to 2 risk-reward ratio. So now it's totally acceptable. You could have used the 50% level to enter on this trade. But let's say you wanted to get the most bang for your buck. Well, then we simply move up to 75% from the bottom of that. And we'd sell at 83.75, which we would have taken us a couple of days to get into, but we got into the trade prior to being, exiting the trade. And our stop is in the same place, so we're only risking 0.5 point, 50 cents, okay? And in the next 2 days, we exited at the exact same place, and we made 2 points now. But this time, our risk-reward ratio is 1 to 4. We risked 0.5 point to make 2 points. Very acceptable, and now using the exact same strategy that you probably would have tossed because it didn't generate a positive risk-reward ratio, now you're generating the exact same strategy, a 1 to 4 risk-reward ratio, okay? I want to show you this. Here's an older chart, a weekly chart of the diamonds. That's the ETF that mirrors the Dow Jones Industrials. Now here was, once again, was an actual signal generated by using one of our strategies. Once again, this is an older chart just for educational purposes. But, look at this and see if this has happened to you before. Let's say you learn this technique, you apply it to your current strategy. And here's where the basic format calls for it. Enter right here, to place your stop, and to exit. As you can see, our risk reward is much greater than where our entry is going to be. So you can apply, once again, go and measure the bar prior to entry, apply any of these levels that you want, and you would really increase your risk reward ratio. You'd still exit at the same place, your stop would still be the same place, but you could have used any one of these. Or if you wanted to buy multiple shares, you could have used any one of these levels to buy on each level. It's up to you. And you would have exited 2 weeks later and had a nice gain. Here's the only problem. Many times our students will say, Steve, I love this technique. Thank you for sharing it with me. But this happens so much now when we have volatile markets. I'll exit maybe with a 1-to-2, 1-to-3 risk-reward ratio where there was none before. And then look what happens. It just continues going in my direction. And I really leave a lot on the table. Even though I got an acceptable risk-reward ratio, even though I use this technique, I left so much on the table because it was the beginning of a mega trend here, okay? So this brings us to secret number 6 in our 7 secrets of money management course. You can also control the risk-reward ratio of any trade by altering its exit point. So before we showed you how to alter its entry point, now you can alter the exit, okay? So how do we do that? Well, we need another tool. Trading risk-reward with the PET D. This is by far our most popular and probably our most consistent and powerful tool at specialist trading. It's the PET D, and what it is a short-term trend identifier. When you see a series of green bars like this, obviously you're in an uptrend. And when you see a series of red bars like this, obviously you're in a downtrend. So it tells you everything you need to know in terms of capturing and being in sync with the trend. Okay, that's how powerful this is, and that's how great it can help you. So how do we use this? By altering our exit point. All right, so here's another example of another trade here in KSS, an actual signal. I believe this is strategy number 1, and let's say you would have entered right here at this point, okay, and exited on the opening of this large gap up day. So that's a nice trade. You probably would have made in just a couple of days about 3 or 4, maybe even 5 points. But look what happened. The stock just kept going higher and higher and higher. You left about 2 or 3 points on the table. So how would we have known to stay into this trade? All you have to do is apply the PET D. Once you apply the PET D, it changes the colors of the bar automatically. It doesn't repaint. The minute a bar closes, it stays that color. And it will stay that color until it closes, okay? And then it's just there for good. So these bars remain green. So even though you're out of the trade, the PET D is telling you you're still in an uptrend. So what we tell a lot of our students to do is to simply exit the first half of your position at the standard exit point, and then the second half, or a portion of your position, let it run. And how you do that is by monitoring the PET D. If you're long and the PET D remains green, then you continue to stay long. So if we would have stayed long in this trade, look what happened. Even though we had a sell-off here, the PET D was green. We went up higher, went sideways, the PET D still remained green up until this point, okay? So that's our first red bar. The PET D is giving us a warning. It's not telling us. It's not a trade strategy, a trading strategy, or a signal generator. It's just giving us a warning that the trend may be changing. Remember, the PET D is just a trend identifier. So one technique is to simply place your stop directly below that first red bar. And so now, instead of exiting right here where you most likely would have exited, you've captured all of these gains. And it locked you in. So instead of exiting with maybe a 4-point gain, you've got more like a 12-point gain now by holding on to the position. How about this? HCN, all right? This was an actual signal by strategy number 4 once again. Okay, let's say you would have shorted roughly about 75. Most likely you would have exited around 72. So that's a nice 3 points in just a couple of days to the downside. Okay, how could we have increased our risk-reward ratio by holding on and letting our gains run? Well, we just simply add the PET D. But since we're short now, we're looking for red bars, right? So the PET D was red the entire time. It continued to go lower, and even on this bounce, it stayed red. But on this first bounce right here, it was the first time it turned green. So that's your signal to move your stop for the remaining portion of your position just above here. Now, if it goes higher the next day, at least you captured a few more points. So as we see, it never went higher. In fact, it had another green bar. That's okay. As long as you had the first green bar, you keep your stop there, regardless of what the colors are. but then it went back into consistent red bars until we had another green bar. So now you move your stop down to here. So here's where your stop is, okay? You could get stopped out in the next bar, maybe the next few bars, but you just leave it there, and it quickly changed to red again. And you just continue doing this process all the way down. That's how you will really capture those large gains, increase your risk-reward ratio tremendously by tracking the trade. Here's an intraday chart of the E-mini, a 5-minute chart of the E-mini. A little while ago, here was an actual signal to go long at the beginning of the day. Most likely we would have entered around 21.15 and exited around 21.17 or 18 for a quick 2 or 3 points. But once we apply the PET-D, we could have exited half our position around this level and continued to track until this first red bar here, roughly around 21.20, and we got stopped out. And look at how the PET-D gave us an early warning that the trend was most likely going to change well before we started going much, much lower, all the way down to making new lows here at the beginning of the day. But because of the PET-D gave us an early warning, we were able to lock in those gains and squeeze out an extra 2 or 3 points out of this trade. You can even use this on range bars. I know a lot of our students like to trade range bars. Here's a chart of the E-mini, another signal that was generated. Here's a sell right here. Most likely you would have taken, now these are this is a 3-point range bar here, so most likely you would have taken a nice 5 or 6 point gain here, roughly around this point. But if you had added the PET-D, you could have exited half your position here and then ridden the remaining portion down until the end of the day. So instead of taking profits at 20.70, you could have held out for an extra 20 points or $1,000 per contract if you just held for the remaining of the day. Okay? That's all because the PET-D kept you in the trade. This is the beauty of the PET-D because it will keep you in those really powerful trends. I'm not saying they happen all the time. Many times there's a lot of whipsaw and going back and forth. So in that case, you'll exit half of your position at the initial exit and then move your stop to unchanged. Most likely you're either going to get stopped out unchanged, or if a really large trend ensues, well, then you'll be in it. But if it doesn't, well, at least you made money on the first portion of your position. That's the way to trade. That's what money management is all about. Making your own decisions, not just blindly following a system or what someone's telling you in a chat room, but making your own decisions and becoming a part of the process. Lastly, we can look at currency pairs here. Example in the euro-yen. Okay, this was a nice trade that would have generated a couple of hundred pips, but if we stayed in longer, we added an extra couple of hundred pips to this trade. And we can also do this with investing. Here's a chart of the weekly Australian dollar. Here's where we would have entered. Most likely we would have exited here. Now this would have been a great trade. We would have made about 300 or 400 pips. That's about $4,000 in just about a month. But look at if we had stayed in. That's about an extra $10,000 to the downside per unit if we waited for the PET-D to give us an exit. All right, so let's review before we go to question and answer time. Remember, secret number 5 states you can control the risk-reward ratio of any trade by simply altering its entry point. Too many students, especially students that we know that have joined our membership, say, well, Steve, you know, I love your trades and they seem to work a lot, but it just really bothers me. Everything I've always been taught is that I have to have like a 1-to-3, 1-to-4 risk-reward ratio. And most of our stuff is 1-to-1, 1-to-2. Those are just the basic formats of the strategy. You are in no way required to trade it that way. Remember, we give you a basic foundation, but let you mold and with our guidance and format it to meet your needs. One of the ways to meet your needs is to use this simple technique I share with you today, which by altering your entry point will give you that acceptable risk-reward ratio. That way you can sleep at night knowing that instead of a 1-to-1 risk-reward ratio with a very consistent strategy, you now have a 1-to-5, maybe even 1-to-10 risk-reward ratio, okay? So remember, you can apply this to anything. It doesn't have to be one of our strategies. It works fantastic with our strategies because of our format with the setup bar. But you can use that, or you can use the second technique we share with you, which is secret number 6. Oh, before we go into that, let me just remind you once again, if you're using secret number 5 technique, remember, you take extreme range from top to bottom. That's how you format it, and this is of your setup bar, the bar prior to entry. and then you simply go down 25%, go down 50% from the top, or go down 75%, and those are your entry points. So that's secret number 5, okay? Now, secret number 6 is you can control the risk-reward ratio of any trade by altering its exit point. Okay, so many times you'll have an acceptable risk-reward ratio, maybe 1 to 2, a nice quick trade, and then it just continues going, and you say, boy, I made a couple $100. Could have made a couple of $1,000 if I just held on. So how do we do that? We track the trade, but how do we know how high it's going to go and what's a good exit point? We use the PET-D. Okay, remember the PET-D is probably the best trend identifier I know of. I was taught this over 30 years ago on the floor. I use it to this day. It's a great trend identifier, and we've changed it to simply be a color bar tool. So all this color bar algorithm does is paint the bars either green or red, and you know instantly if you're in an uptrend or a downtrend. Okay, now here's today's attendee special for all of you, okay, because we gave you great information, but here's the special we're going to be doing. We are going to be giving you the 7 Secrets of Money Management course, as you see here. 7 different things to manage your trades in any strategy, in any direction, any market. It doesn't matter. You'll get instant course access. Remember, this comes with detailed instruction, 8 videos, stop placement techniques, the RPS method, which is a method I've used consistently for telling me how many shares or contracts to trade with. We're going to talk about risk-reward ratios. Again, some more information concerning that. We're also going to give you the ATM method. This is advanced trade management, which has probably saved me tens, if not hundreds of thousands of dollars over the year in telling me when is the right time to trade and the right time not to trade. And then you have personal lifetime correspondence with myself so that you can always contact me regardless of time or how long you've been in the program. We're going to offer you the 7 Secrets of Money Management course along with the PET-D. This is our Primo early trend detector. Remember, this is a road map for any market. It doesn't matter if you're an intraday trader. It doesn't matter if you trade the currency pairs on weekly bars, monthly bars, or if you use daily bars for stocks. This will give you a road map telling you the direction of the trend. It's a proprietary color bar algorithm. This includes the add-on, which will automatically change your bars from green to red. In addition to that, it comes with 2 continuation trading techniques and 2 pullback trading techniques. It also comes with another stop placement technique. Remember, you can apply this to any market, any strategy, and any time frame. As well, you will get personal lifetime correspondence with me. All right, so these are 2 fantastic tools we have, 2 fantastic courses we have. We call this our Money Management PET-D combo. Now, just to show you how valuable this is, my sister site, which is Pro Trader Strategies, they market this Money Management PET-D combo on their website. They manage this course here for close to $5,300. But we're dropping this price dramatically for all of you today. And in addition to that, we're offering payment plans down to $39.95. Now, I know a lot of you may not be able to come up with that sum, $39.95 to trade with us, but you'd love to have it. Don't worry, there are payment plans available. You can contact Pro Trader Strategies and they can set up a payment plan for you so that you can be up and running and trading as soon as possible. Here's how to get a hold of the special deal before we go to question and answer. I'm going to leave this information up on the screen here, but please remember, this is the phone number to contact Pro Trader Strategies. This is the email address, and if you look on the right, you'll see they've just posted the live link. That's to the sign-up page. Now, the link at the very bottom takes you to that combo sign-up page, but it's not live. You have to copy and paste that. But if you look on the far right in the chat box, they have posted the live link, and you can go there and check out all the information provided for this great deal, okay? I'm going to leave this up here for you, so if you want to contact them, and I'm going to open up the question and answer box, and I want to thank all of you for waiting to ask any questions. And let's see, the first question is once again the most popular. I get this all the time. Is this being recorded? Yes, it is. So you can contact Pro Trader Strategies right here, as you see, and they will send you a link, okay, to this, okay? Let's see, Dennis is asking, if your trigger bar is 1 point, do you get to buy a 0.1-to-1? I'm not sure seeing what you're saying again, Dennis. If by trigger bar, you're saying the setup bar, okay? So it all depends. Yes, if you're using the basic format, I guess, yes, your risk reward would be basically 1-to-1, okay, of one of our strategies. That's not all of our strategies. We have other strategies that automatically generate much higher risk reward ratios, yes. But if you're it's not called the trigger bar, it's called the setup bar. I mean, I know some people will call that the trigger, but we call it the setup bar because that means where everything is set up. Okay, so if your setup bar is 1 point, most likely the basic format will generate an exit. That's just a standard format though. You don't have to use that. The reason why most people like to use that is because one of our strategies calls for getting in and out rather quickly. So that's what they like to use. But if you would like to increase, then yes, you measure that range and you would go down 1/4 of a point for your first entry point. You would go down 1/2 a point. So your risk now would be roughly about 1/2 a point. Or you could go down 3/4 of a point. Okay, so that would be the standard basic format for that. Okay. Next question, Stefan asks, does the PET-D run on MT4? Yes, it does. In fact, let me just share with you the charting software programs that it does run on that you can use for the PET-D or any of our other of our strategies. You can use it on MT4, obviously, on Metastat. You can use all of our strategies and the PET-D as well on NinjaTrader and on TradeStation. Now, you can also use it with Thinkorswim, but you just have to alter a few things. What you'd have to do is you can use their data that Thinkorswim provides you with, but you have to apply it to a NinjaTrader platform because of the way the PET-D is set up. We don't have permission right now to run it on Thinkorswim. So we help you set it up on a NinjaTrader platform, and the best thing is that NinjaTrader platform is free. With this particular deal here, you'll get a free NinjaTrader platform, and all you have to do is when it asks you for which data you're going to use your data from Thinkorswim. It's that simple, and you'll be up and running right away with the PET-D. So it's a really, really great deal here. In fact, we have a tech support staff here that will help you set that up. So a lot of people are afraid to put that together because they say, well, I don't really understand that. I don't know how to do it. Don't worry, we'll take care of that, all of that for you so that you can have the PET-D and any other of our strategies up and running in a matter of moments, okay? Dennis asks, why do you use this structure again? Well, remember, we use this structure because over time it is shown to be very successful in terms of being consistent. And when people usually, want to buy at a limit, they use discretion. And over time, you'll see that discretion is just basically a whim. You've seen like, well, I've seen this work maybe a couple of times, so I'll do it again. But it's just basically a whim. There's no, rhyme or reason why you're doing it. But if you have structure, which is based off percentage points of the actual setup bar, you seem to have this work. It works a lot for some reason. I mean, and it's not systematic. It's not mysterious in any way where it's something that, no one knows why. It's just very basic. There's a lot of traders that will use this on the floor, and so many times the prices will drop right to those levels, and then they'll go right back up because that's where the buyers come in, because a lot of floor traders use this particular technique. Okay, so that's the main reason. Stefan asks, could we code this for CTrader for one day? I'm not sure what you're asking what to code. What are you asking what to code? Let me go on to the next question. Maybe you can explain that, Stefan. Dennis is asking, sorry, what do you mean by percentage? Well, remember, percentage is, as what we went over before. You take the top extreme high and the extreme low of the setup bar. That's the bar prior to entry. And down 25% is your first entry point. Down 50% of that bar is your second entry point, and down 75% is your third. So that's what we mean by percentage point, okay? In fact, we just basically went over that just a few minutes ago, so you may want to request a video of this. So we explain that pretty much in detail. Now also, let's see, Stefan is asking about the PET-D. Okay, so you're thinking of having the PET-D for CTrader. We've had we haven't had a lot of requests for that particular program, but we've had so many people so happy with it, and the reason why we want to, not really overexpand is because there's serious talk of next year possibly leasing the PAT D. And if we lease it, we don't want to really expand it all that much because we've had a lot of hedge fund traders who use this and a lot of large institutional traders that use our PAT D, and they want to take it all for themselves. So we may just go on a licensing platform, which would mean that you would basically have to pay for it quarterly or maybe even twice a year. So we don't really want to overexpand at this point, and until there's a lot more requests for that particular charting platform, we'll see. But at the time right now, we have a lot of people that say that the major charting software packages such as Metastock, MT4, NinjaTrader, and TradeStation are the ones it seems to work the best with. Okay. Let's see. Now the question, Paul says, sorry for the late arrival. I had to work late than expected. Will this be recorded? Yes, it is, Paul. It is being recorded. You see the information in front of you, Pro Trader Strategies. Simply contact them and they can send you a link to this recording. But remember, I know a lot of people say, well, let me watch this recording again and let me see how valuable this is, and then I will make a decision. This is only running for a short time because, trust me, we do different programs and different informational webinars every week or every other week with different promos. And so once this is over, this is over. Now, ask yourself, at the beginning of the year, did you have all these hopes and dreams, all these goals of where you wanted your trading to be, how your success rate would be? And ask yourselves, are you there? We've only got a couple more months or so left in the year. Are you there? Are you where you thought you'd be? Most likely, the majority of you are not. This is the way trading is. We all have these dreams and aspirations of how we want the year to end, and most of us never reach those. I know I didn't when I first started trading. I didn't at all. Okay, these techniques I feel very strongly will help you get onto that road to consistency. If you've really struggled, I know you may be struggling here and thinking, well, I'm not sure I wanted to spend that. Trust me, this is powerful information that has stood the test of time. If you like what I presented today, it's jam-packed with more information and more techniques that are even more powerful than what I presented that can really help your trading. So call the people at Pro Trader Strategies. They can talk with you. They can set up a payment plan so you don't have to come up with a large deposit. You can come up with a fairly decent deposit, and you can be up and running ASAP, okay? And you can get your trading on track possibly in the last 2 remaining months of the year, 2 or 3 remaining months of the year. So here's the information. Once again, I want to thank you so much for attending. I hope you got some good information, some good use out of this presentation. As I stated, we are an educational company. It's not our philosophy to force feed you with signals. We want you to make your own decisions and to become a part of the process. I hope I gave you some information today so that you could start to get on that road. But if you really want to get there and have someone who's been trading for 38 years as your personal mentor, sign up for this great deal. Contact the good people at Pro Trader Strategies, and they'll have you up and running with a payment plan as soon as possible, okay? I want to thank you all so much for attending today. I wish you the best of luck trading, and I look forward to all of you becoming students and members of mine at Specialist Trading. Thank you so much. I shall see you next time. Bye-bye.